All right, good afternoon. Welcome to today's live recap. So heading into the open, our short-term bias was still neutral bearish, while the intermediate continued to be neutral bullish. We had pre-market resistance at 54.87.5 to 93, followed by the initial resistance and bias confirming zone at 54.99 to 55.0675. If we saw a break and hold above both of those areas of resistance, that would trigger an intraday bullish confirmation. It could lead to a test of 55.27 to 34.75 with potential to eventually reach the 55.55 to 55.65 area. And a failure at the initial or pre-market resistance zone would leave the market balancing in yesterday's range, and in that situation we could come back down into initial support where buyers may still be active on first test, and a break and hold below that area would serve as an intraday bearish indication, and that could then result in a test of the previous day's low area at 54.42.5 to 47.5 with potential to head lower if we were seeing continued downside momentum and the other markets also taking out yesterday's lows. So with our short-term bias being neutral bearish and the intermediate being neutral bullish, we would still have to be fairly flexible on direction for the day. And early in the session, how the market behaved at the pre-market and initial resistance would be very telling as far as the upside goes. And then on the downside, initial support would help us figure out how weak the market is. So that being said, let's jump into the chart and see how it played out. Now, when you have this type of situation where you have a bias changing zone and then immediately you have the main area of resistance, which is a bias confirming zone, what we want to look for is whether buyers are able to hold ES above 93. And in order for buyers to hold ES above 93, which is yesterday's high, we would need to see signs of initiative buying. And that means we would need to see broad market strength and sustained upside momentum, with the NASDAQ also heading higher. And because this is a bias confirming zone, and because our short-term bias is still neutral bearish, there is of course the potential for failure at that area. Now, the way that you want to structure your trade on the short side at initial resistance is to scale out ideally ahead of 93, because that's really going to be the tell. If we continue to hold 93 and we're seeing signs of initiative buying, then the market may eventually head higher. The benefit of structuring your trade by getting a scale ahead of 93 is that even if the market is eventually going to break out, a lot of times it will give you your scale and then balance and then break out, which means that most of the time you'll be able to get into an opportunity that has 3 or 4 R potential, and even when it doesn't work, you're not going to lose 1 R, you'll lose half an R, right? Because you're reducing your risk by 50% as soon as you get your first scale target, and you're scaling out of a quarter of your position, or at least that's the way I do it. So heading into the open, we have this key area of resistance, and then we also had resistance in NQ at 18,787 to 841. For those of you who follow me on X, on Twitter, this is something that I posted about ahead of the open. So if you're not following me there, then of course do so, because I do post certain real-time information that doesn't make it into the plan, or it might be about NASDAQ on X. So heading into the open, NQ is pushing up into its own respective resistance, and ES is pushing up into the bias confirming zone. So now let's see how we can structure that trade using Vulcan. So 99.25 to 06.75, and if we just use even the default targets in Vulcan, we can see that on the downside we are shooting for a move towards the gap fill So 79.75 is the previous VPOC. That's the high probability target. And then our final target, which should be more optimistic, is still actually relatively conservative at the initial support zone. So just using the previous VPOC and initial support as downside targets, an entry at 5500.75 gives us a scale ahead of 93. That's ideally what we want. We want our scale to be ahead of the previous area of resistance, which may act as support. And I would say at the very minimum, again, this is average probability, at the very minimum. And depending on the perspective, you may even say it's high odds on first test, and then it becomes average probability. But at the setup level, let's say that it's an average probability setup, 50-50, given that it's a bias confirming zone, the short-term bias is in our favor, and of course there's always the potential that even a bias confirming zone can be taken out, but it usually requires more effort. So this is how we can structure our trade early in the morning. This is something that can be done before the market opens. There's not really any in-depth analysis that is required. I think one of the false beliefs that hold traders back from executing is they think that they can predict which setup is going to work and which one is going to fail. And the reality is that you can't. The reality is that I can't. It's a probability-based game. We don't know which setup's going to work. The best you can do and the best results that you will get is by leaning into that probabilistic nature of trading the markets and just limiting your trades to positive expectancy, thought out, rules-based setups. So in this case, what are we doing, right? It's a bias confirming zone. It's in direction of the short-term bias. We don't know if it's going to hold. But if it holds, then we can go back down to initial support. That's the idea. We don't know if it will hold, but there's at least a 50% chance that it will hold. And that means that if it does hold, then you can get over 1 R of expectancy, which is a very healthy expectancy for any given trade setup. So you just take the trade, you assume the risk, you wait for the market to do its thing, and that's really all there is to it. You can try to complicate it, you can try to add all sorts of indicators, you can look at footprint charts, delta, ticks, whatever. It's not going to change the fact that you are not going to know which trade is going to work and which one is not going to work. If there were a way to know which was going to work and which one is not going to work, then you would see traders out there with 90% and 100% win rates. And yet we don't. We don't see any professional traders that have 90% win rates. I'm not referring to, YouTube and Twitter and social media. I'm talking real traders who actually make real money. I don't know anyone that has a 90% win rate, or anyone who makes actual money has a 90% win rate. So it's kind of a losing battle to pursue a super high win rate. And you can add as many indicators as you want. You can either take my word, or you can go through and spend the next several years experimenting with indicators and playing around with all the different tools and all the gimmicks and shit out there, and you will eventually arrive at the same conclusion that I have, that it doesn't matter how many indicators you look at. At the end of the day, it's a game of probabilities, and you can simplify your life and your trading by just imprinting that in your mind. I don't know what's going to happen next. I don't know if this trade is going to work. My job is to follow the process. Is it a bias confirming zone? Yes. Is it in direction of the short-term time frame? Yes. Is there positive expectancy? Are my targets realistic? Yes. Okay, take the trade. That's it. That's how simple it can be. Or you can take the flip side and do all sorts of analysis and all sorts of back testing. And if all of that effort were going to increase your win rate, I would say go do it. But the reality is it's not. So keep it simple, stick to the plan, and overall, you'll do much better. Now, on the downside, we can see that the scale target gets hit very quickly over here, right? 93.75. It's ahead of the zone. That's ideal. That's how you want it to be. As soon as that scale target gets hit, your risk will get cut by half. So we have a column here called open risk. When you first put on the trade, it'll say 1, meaning 1R. As soon as your scale target gets hit, it'll change to 0.5, meaning now you have half an R of open risk. And once the market puts in this opening range breakdown, now you can move your stop to the swing high. You can move it to 55.01.5. At that point, your open risk will be 0. And then as soon as your high probability target hits at 54.79.75, your open risk will change from minus 0.5 to something like plus 1.5 or plus 1.6 R, something like that. And that means that if the market went all the way back up and hit your stop at the high of day, you'll still make 1.5 or 1.6 R. So we can see that in today's case, ES finds buyers at 54.70 quarter. And the other thing is, even if you didn't get filled early on this initial little push up, you can see that as the market is establishing the opening range, there's a pretty notable change in the behavior of the advanced decline. So this is still a good price to get in on, over here. So if you missed it on first test, you don't have to skip the trade. You can still take it. Even if you get in at 5,500, it's still a nice trade setup. 2.7R is still solid. And that's assuming these targets. You might expand your final target, which is what I did. I started with my target as being 54.66.75, and then after the market balanced at 54.70 to 71, I expanded the target. Because now, if we broke 70 quarter, we're not going to stop at 66.75. We're probably going to break that zone. So if ES had gone in a relative straight line from initial resistance down to initial support, I think then it would have been a good target. And we could probably even trade initial support from the long side in that situation. But what happens? Well, the market ends up consolidating in a range, and then we get a intraday balance breakdown pattern below the first hour low. So now we're probably not going to stop at 66.75. Now we're probably going to test this area. So you can expand your target out. And even in this situation, I think that Vulcan can be very helpful in helping you determine your final target. So 42.5 to 47.5 doesn't mean you have to trade on the long side, but you can set up a long there to see what a good entry price would be, right? So as far as a high odds target goes, that should be the first hour low or one tick ahead of it. As far as our final target goes, that could be a move back up into initial resistance. It could be a move back up into the 79 area, the previous VPOC. Any of those would be fine. It could be the 24-hour VWAP. Anything like that would work as a final target. So if we even just use 8650, kind of the default final target, you can see that 49 is a very nice entry. So what we can do in this case is, if we're in from 5,575, which was the entry I was using, and then you end up actually holding it down to 50 or 49, now this ends up being a nice 3.5R setup, and you can actually get more out of it. So your final target should be optimistic from the get-go, but remember that in real time, you may need to tweak it, right? You may need to tighten it up. You may need to, at other times, push it further out. And today, it made sense to push it further out because the market had now consolidated in this range and was now breaking down below this intraday balance. We bounced a little bit at the open, then we broke down, bounced back up, balanced again, and now we were breaking this intraday range. And the 100% range extension puts us down near 48, 49. So that would be an ideal spot to exit if you were still holding your short. And by the same token, we can even lean on that area to take a long setup because the market had already tested above the prior day's high. It lowered the odds of the market breaking below the previous day's low. Now, of course, anything can happen, but statistically, it's very low odds for the market to test above the previous day's high and below the previous day's low. So that is what made this a nice trade setup. Now, along those lines, if ES had not taken out yesterday's high and failed at pre-market resistance and then come down to this zone, it would be lower probability as compared to the way it did it today, right? So that's why you want to get out over here around 49 to 50. And by the same token, you may even consider going long there. Again, we don't know if the trade's going to work or not, but what we do know is that statistically, when the market has taken out the prior day's high, there is a significantly lower probability of it taking out the prior day's low. And as I mentioned earlier, we don't have to predict if that area is going to hold or not. We can simply look for a move back up into the first hour range. That's our first target right over here. And then our final target could be somewhere around the VWAP, or if you're really optimistic, could even be the pre-market resistance zone. But something like the VWAP, the 80 area, that would be perfectly fine as our, final target. So somewhere around 80 or so, if you want to use that as your final target or something along those lines, that'd be fine. Typically, it is better to be optimistic with your final target. Otherwise, your entry becomes overly conservative. So that's the only trade-off. But the long is optional. In my mind, this is a very good area to exit and cover your short. And even if the market is going to break lower, quite often it will first respond. You'll get a reaction, and then it will break lower, right? So we can see that on first test, the market pushes up here into 57. So if we set up a long at 42.5 to 47.5, again, we're looking for, a move back up towards the first hour low being the high odds. And then over this, again, we can either leave it at 86.50 or even move it to 87.5. I'm just going to leave it as is. And you can see that with an entry at 49, we're getting our scale at 56.5, which is ahead of the broken support, which may now act as resistance, right? Same process that we used on the upside. Scale target is one tick ahead, a little bit ahead of the previous resistance, which may now act as support. Same process we're going to apply to the downside. We want the scale target to ideally be ahead of or at the previous zone, because now this broken support may act as resistance. And the purpose of the scale target is quick risk reduction. And we want that scale target to get hit even when the zone eventually fails. That's how you know that your scale target was set correctly. It should technically hit, not all the time, because nothing works all the time, but it should technically hit majority of the time, even on your losing setups. That's what you want. That's the desirable outcome here. So we can see over here when the market prints this low at 48.25, we bounce to 57. That's your broken support acting as resistance. So normally, if you're not scaling out and you buy over here and you see the market reject, you might start sweating it a bit when the market comes back down again. But in this case, if you're scaling out at 56.5 and you're reducing your risk by 50%, it makes it a lot easier to sit through some of this short-term chop and wait for your next target to get hit. And once the market has consolidated here and you start to see a shift in momentum, because you're seeing it already, right? the tick is slowly printing less and less on the downside, and then you start getting better upside tick readings. Well, once you get that, now you can move your stop to a low of day and you're at zero risk. So that's how you would manage it on the long side. And as the market pushes higher, again, you might push your target out. You might think, well, the low of day is probably in. Maybe we're going to go back to pre-market resistance. If we look at the intraday price action, I would say that resistance was built around 87 to roughly like 96 or so, like right here. Like this is what would be considered active resistance on the day now. So if you targeted 87 as your final exit, 86.50, it's fine. And what I find is that even with the current target setting algorithm in Vulcan, a lot of times the default targets are good enough. Not always, obviously, but a lot of times, the targets that Vulcan sets by itself, which are already based on market structure, are pretty good. You don't need to really tweak them too much. Now, we're working on improving the target setting algorithm where Vulcan will take the real-time intraday structure into account. It'll take the bias into account. All of those things are coming. So the target setting algorithm will improve over time, but even the current one, which is pretty rudimentary, is fairly good. So if you struggle with target setting, I think even if you just use the standard automatic targets that Vulcan uses, which on the upside, you can see 79.75, 66.75. On the downside, we're looking at a pop to 79.5, 86.5. A lot of times those targets still actually work out pretty well. So if you struggle with target setting, of course it's not going to work every time, nothing does, but it's a pretty good start. You get at least a nice starting template on how you want that trade structured. And of course, then, beyond that, you can just use your own targets and figure out, what intraday levels make sense. Like I said, that's a feature that's currently in the works, so it'll get better over time. But even the current algo is relatively good. And if nothing else, at least you can take away this principle that an entry on the long side can help you set your final target on a short that you may be holding. So if you're holding a short from 5,500 or so, and now you can look for a move down to, let's say 50 after the market's balanced. Now you've taken a 3R setup and turned it into something much better. So we can see that eventually the market does push all the way back up to the high of day and initial resistance where sellers step in yet again. And I think the dynamic that we've been seeing over the last couple of days is confirming that idea of the short-term bias being neutral bearish and the intermediate term bias being neutral bullish. And anytime we try to push lower, those intermediate time frame buyers step in and push the market back up. And anytime we push up, we have short-term sellers that push the market down. Eventually, of course, we'll get resolution, and one side will clearly win out. But similar to yesterday, we did not have any major economic report out today that could serve as a catalyst for a big directional move. So we just continue to consolidate within a range. Now we have the presidential debate later on today, so who knows, that might move the market a bit. But so far, we haven't really had any major catalyst that can really push the market one way or the other. We do have the CPI number out tomorrow morning. Quite often, that will behave as a catalyst. And then we have the producer price index on Thursday. So at least now we're heading into the next couple of days where there is at least a potential catalyst for a move one way or the other. So that's a wrap on today. Now, as we head into the overnight session, on the upside, the initial resistance will continue to be valid and in play, and a break and hold above it can still serve as an intraday bullish confirmation, and it can still lead to a test of those upper zones at 55.27 quarter to 34.75 and 55.55 to 65, where sellers can still be active. And until we take out initial resistance from today, we should still remain fairly flexible as to which way this market may go. But so far, every time we've pushed down over the last 2 to 3 days, buyers have stepped in with some real force and pushed the market back up, so that intermediate time frame bullishness is still in effect. On the downside, the 54, 42 half to 49 half area can be used as short-term support. Now, ahead of that, we also have support around 54, 65 to roughly 75. That area has potential to behave as support as well. We have a key high volume node at 54.65. So that can act as support too, but the one that really matters now is going to be 54.42 half to 49 half. That covers our 2-day low. And on the upside, we can use initial resistance. We'll also keep an eye on 54.93 to see if the market's holding above it. Holding above that area is a sign of strength and stability. So that is a wrap in terms of what to expect in the overnight session. Let me see if there are any questions, and then we will wrap up. Joe is saying, so with the selling in the AM, break of initial support, you felt that any shorts now were off the table? I got ran over attempting short retraces. Yeah, I mean, to me, the short side's done, right? Yeah, I'm not interested in shorting now. Like, we've hit the final target, essentially, right? So I'm not interested in shorting anymore. And it depends on where you were shorting to, but the fact that we, reversed right back into the first hour range and then held this little breakout or directional bar, that was a bit of a tell too. So if the market were bearish, we would not have taken out this swing high right over here, right? We would have held below it. So the fact that we broke out into it, then just got a small response, never took out this breakout bar, and then just went right back up, that's a pretty good tell that you now don't want to fade it. You're just late to the game. The reality is that you should be shorting at initial resistance, and if you have missed it over there, then maybe you can short at pre-market resistance a bit later on with the idea that the high of day may be in, but that's about it. I don't think that you can now in the afternoon look for shorting opportunities. If this were truly a weak market, we wouldn't have gone back up. If this were truly a weak market, we would have perhaps bounced into the first hour low, rejected, failed, and then sold off again. The fact that we got a momentum shift into the first hour range and then just held this bar and continued to go higher, that's a pretty good tell that you don't want to be fading that move. So I think this is yet another reason to take the trade without waiting for confirmation. Now, I don't know if you shorted in early morning or not, but I would venture to say maybe you didn't. You can let me know if you did, but I would venture to say maybe you didn't short it in the morning and we're kind of playing catch up in the afternoon, trying to kind of catch the same move. That's pretty common. Like, that's a common trap in developing traders is, missing the ideal setup and then getting overly aggressive in the same direction at the wrong time. No, now we're done. The downside is done now. So you have to train your mind to take the trade without waiting for price confirmation, without knowing the direction of the day. See, the reason that you find it psychologically easier to short this move is because you think that you now have clarity on direction. And that's why you're willing to step in. And it's counterintuitive, and you end up actually losing on those trades, whereas Over here, I don't know if it's going to work. Like, I'm not telling you I knew this was going to work. I had no idea if this was going to work or not. We could have just balanced and broken out, you know, or we could have just gone through. Like, anything can happen. I don't know what's going to happen. And I've been looking at these charts for like 20 years now or something. And I don't know. Legitimately, honestly, I did not know that the market was going to fail here and go back down. It could have done this, or it could have gone higher. And that's after 20 years of looking at this market. And I can't tell if it's going to break out or if it's going to fail. It's a roll the dice. So instead of waiting for directionality, instead of waiting for that mental comfort of, oh yeah, now the market's bearish, now let me short, not a good idea. Train yourself to put on risk when you don't know what's going to happen. It's going to save you from all these unnecessary losses later on. It's going to save you from the fear of missing out later on. It's going to change your whole outlook towards the market, because not only will you not be shorting the moves here, you may find yourself buying down here. If you shorted up here or even over here, and now you get this real fast move down into the final target, you might find yourself buying and going long here. Like, it could completely transform your trading. But you have to be willing to roll the dice and play by the rules. Just try to follow the system. I'm telling you, just for the next 10 trades, make it your goal to sit through the discomfort and just follow the process as best as you can. And if you want to increase your odds of making money, then execute on Vulcan, because that'll automate majority of the trade planning process for you. I mean, that's really the best that I think anyone can do. So focus on that. Give it 10 to 20 trades. Give yourself some room to figure this out. And trust the plan, trust the process. The best opportunities are typically in the first 2.5 to 3.5 hours of the day. So really in the afternoon, I don't really have a desire to be trading. I'm pretty much usually done by lunchtime. And unless there is overwhelming evidence of directionality, or it's a trend day, or it's a super high volume day, or there's a bigger pattern in play where there's one side that's clearly in control or something, those are the only days where it makes sense to stick around and trade the afternoon session. But majority of the time, you can be done by noon. And the best trades are typically in the first 1 to 2 hours. The best entries are typically in the first 1 to 2 hours. So, this isn't like any other job where sitting around is going to make you more money. You might find that you make more if you limit your trading to the first 3-4 hours, and then you stop. That alone could be a game changer. So, something to think about. All right, guys. I think that wraps up the questions that were posted here. So, thanks for attending. I hope you all traded well. And as always, we'll be back at it bright and early tomorrow morning. Take care and enjoy the rest of your day.